everyone, checking in here. I haven't really been trading this week. I've been dealing with technology issues piling up on each other. Got an internet issue with a wire on a pole that they're fixing. Got my computer fan stopped working right after that. It keeps overheating and shutting down. I got to open it up for some open heart surgery. So I haven't been trading because when things aren't ideal, we don't trade. It's a hard game, and if you're going to play and try and play this game when things are even more difficult than normal, you're going to lose. So slow down until conditions are ideal, and it's nice that we're in tightening ranges and I'm not missing a whole lot in the sector. Otherwise, it would be a little bit more difficult. Where I live right now, people would attribute my technical difficulties to some kind of planet being in retrograde, but I'm going to say it's daylight savings in retrograde that's the issue. So we drew those trend lines on CGC yesterday. We've got a tightening range. It looks like our lower high is set because of the big upper wick today. You see a volume spike, but a lot of that volume is pressure of selling at the end of the day and pushing the price back down. Anything under 48.90 was a lower high, and you can see we're just getting tighter and tighter. This is now a pattern that has been playing out. There's a little bit of a fake out here. We hardly got consolidation, tried to get continuation and rejected, but it is still a clear tightening pattern. Again, if you are a newer trader and you look at these charts and you don't just instantly see these levels stand out at you, draw trend lines, and it makes it easier, more clear visually. And if you keep watching these videos and you keep looking at charts and you keep making your own charts and keep doing your own analysis, then you will see these levels instantly when you look at a chart, and you'll even see it when you close your eyes. So it looks like a rejection right off that resistance line, and we're going to be looking to come down and form a higher low above 43.71 over the next 2 days, and then we're going to be looking for a break either on Friday or on Monday, let's say that. And that's just a guess. You know, news could change that, or significant market activity could change that, but that's just the way that it's shaping up right now. So nice and tight and waiting patiently. Cron is a little bit less clear on the daily time frame, and here's these slow loading times. So it's going to be a 30-minute video. But we've got the tightening range here. It's similar. We pulled back more significantly thanks to the downgrade. Didn't get any bounce follow through like many names did. The bulls are defending this mid-20s level, 2067, 2057, 2053. Today and yesterday was pretty much a double bottom by 4 pennies, and the bulls really responded to that support level, going up about 6% from the low of the day to the high of the day. But there's an upper wick there as well. We didn't get a whole lot of significant follow through. The hourly time frame has broken the lower highs, but we don't have any higher low and higher high follow through confirming the trend change. And SPY has been an absolute raging bull. Again, if you're watching those videos, you've been following along. But SPY saw the first sign of weakness at the end of the day today, and that magnified some of the sell-off in the MJ sector, in my opinion. But other than that, SPY has just been a rock-solid bull 3 days in a row. So Cron, tightening daily pattern as well. I anticipate it's going to break in the direction that we see CGC break, and there's a slight bearish lean. So even if CGC breaks bullish, we might not see Cron break its bullish resistance right after it. It might take a little bit longer. And if CGC breaks bearish, I would anticipate Cron is going to drop back a little bit further because, again, it's already right on top of its support levels, looking down here at 1950 is the next level, and then down to 1872. And as opposed to CGC, if we look at the last lower level, 4168, we're still ways above there, as we are with Cron as well, but a little bit more congested on top of support levels for Cron, a little bit more breathing room in between support levels on CGC. So ACB, tightening range as well. Again, the tightening ranges are coming up everywhere because of the significant pullback that we saw at the end of last week, and now the significant bounce to start this week. And it's the same with SPY. SPY pulled back hard all last week and has been bouncing hard all this week. So we've got our high of the bull move, our low of the pullback, and this upper wick and bearish candlestick on the daily. Looks like our lower high is being set. And then we're going to look to pull back and form a higher low sometime in the next couple days compared to 733 to give us this continued tightening range. Have we lost the hourly uptrend? We have not yet. So losing the hourly uptrend tomorrow would confirm that that is the most likely scenario on the daily time frame, which would tell us to be patient and wait for those breaks end of the week or early next week. APHA is a potential bear flag at this point on its bounce attempt on the daily time frame. It had very weak follow through, and combining that with the size of the pullback that we saw, it is not a strong bounce at all. Declining bull volume, No real follow through today. And this is the kind of scenario where we have to watch out for the lower high and lower low. We lost the daily uptrend, but to confirm we are now in a daily downtrend, that little lower high and lower low would do it. And it would have us looking back down at support of 890 and then 808. So we're still following through with the tightening weekly pattern, high, low, lower high, and we're looking for the weekly higher low to form. And that is a bit of a different setup on the weekly time frame than we're looking at on these other names. So out of the four, I'm taking TLRY out of the equation right now. Out of the big four, APHA is clearly the weakest over the past couple of days. And we're going to be watching very close to see if this little daily chart does get another leg down, because if it did, in my opinion, that would increase the odds that CGC is going to potentially see a bearish break. If one of the major names is going to break bearish and continue seeing weakness, that will have a little bit of an effect on everybody else in the sector. TLRY got a bounce to break $70 to start the morning after a double top at $70, and there was nice follow through off of that. If that's your signal, looking at the start of the day today, we opened on 70, we broke resistance right away, and we ran up all the way to 73.75. So that's a very solid 5% bull move on resistance breaking. Still looking for the daily lower high to be set, but we have to lose the hourly uptrend to be confident that that daily lower high has been set. And at this point, there's no major red flags. The hourly higher low is being set with the consolidation at the end of the day. So daily time frame, bears are starting to scout for an entry again. What was our key support? 75.25. We're heading up towards that resistance, and I expect that the daily lower high will be formed in the mid $70 area, and we're then going to have to pull back, and the bulls are going to have to hold 64.45 to try and form a daily higher low compared to that level. OGI on the daily time frame, and that pattern's not burned in my brain, so I have to wait for the chart to load. It's a tightening daily pattern. High, low, looking for the lower high, very similar to ACB. And if we see a break of the low of today tomorrow, if 890 breaks tomorrow, then our lower high on the daily has been set, and we're going to look to pull back and form the higher low compared to 812. Love tightening patterns because it tells me, number one, chill out, don't overtrade in this tightening pattern. It's clearly a constricting range on declining volume. And number two, get ready because we're going to see a volume spike and a break of these patterns, and that's when there's the most volatility and opportunity. So tightening ranges are coming, looking for the break roughly the same time as we're looking for everybody else. TRST. So still looking okay on this weekly consolidation. The weekly higher low is looking to form, but we need to change the daily trend in order to do so. So this is the scenario where we were looking for the lower high compared to 1261, and I was talking about how as a bull, I would rather be making an entry looking for the daily higher low on this pullback coming to form a higher low compared to 1047, with that being a key support level to potentially utilize as a stop, as opposed to making a bull entry heading up into resistance, knowing that we're more likely than not to just set a lower high compared to that level. So this is a gravestone doji candlestick. It's a bearish candlestick. It shows the bull push, and then the bears controlling the end of the day and closing down at the low of the day. So we're watching for a pullback and a higher low to form compared to 1047. If we see any kind of increasing bear volume, that would be a red flag that we could potentially drop down to lower lows and continue weekly consolidation. But as of right now, we will be looking for a higher low compared to 1047 because we have 10% to work with before we break that support level. HEXO. HEXO on the daily time frame broke the lower highs. We've got resistance at 758 breaking. We didn't get much follow through over that. Same scenario. So rather than buying after the bulls have already used up some energy heading into resistance, this is a bearish candlestick. We're now going to be looking for a higher low on the daily compared to 685. In order for these two bulls to change the trend, HEXO and TRST, which have fairly similar charts, we need this daily higher low and then continuation. So the scenario where that's going to play out, and pretty much everybody, would be CGC and the major names breaking bullish. So if we pull back another 2 days, that's CGC pulling back to stay within this pattern. And then if we were to get a bull break from there, we would be looking at names like TRST and OGI to give us those 2 days of a little higher low and then that bull break. And if that bull break is going to happen in this sector, in my opinion, you either need a news event behind it or you need SPY to get a bull break as well. And SPY is setting up for the potential of that scenario, just a little brief consolidation breather the next day or two on SPY, and then a clear bull break over 281s, the recent highs. That would be a great sign for the sector. VFF. So VFF saw some profit taking today, unable to break to the all-time high, double top. And again, as soon as you see that happen, you look for profit taking without the inability to see continuation. So the start of the morning today, we had the bulls unable to break resistance literally on the first candlestick, and that was it. That's as high as we got. We saw significant profit taking from there. The bulls tried again, and then significant profit taking when they couldn't get anywhere. So that tells us the temporary all-time high is in for now, and now we're in daily consolidation mode. We close near the low of the day. Anything above 1384 will keep the higher lows intact. Earnings are Thursday, I believe. When I look at this weekly chart, I'm not a fundamental analyst, and I don't play earnings because it's a gamble in my opinion, and unless you're putting in dozens and dozens of hours as a fundamental researcher, you're kidding yourself thinking you have an edge on the market, and you're just gambling when you're guessing on earnings. That's my opinion. But on VFF, you look at this weekly chart, and you can say, risk to reward, who does it favor? And the risk to reward favors the bears because the bulls are already so extended at this point. So I'm not going to play this earnings report, but if you put a gun to my head and said you have to pick a side, I would say bearish just because we've run so hard, so fast with so little weekly consolidation that I know to induce further buying from these levels, the bulls are going to have to hit it out of the park with earnings. We know this sector hasn't really been doing that because it's so young. And that would lead me to watch out for potential consolidation. And we know that when we consolidate on the weekly time frame, we will be looking to form a higher low. And the uptrend on the weekly chart is by no means in jeopardy. We're just very extended. So daily higher low looking to form before earnings takes place. And if we see a sell-off to hourly oversold, I will be interested in the bulls, maybe for a flip before earnings. Let's see, tomorrow's Wednesday. Nah, we're probably not gonna get hourly oversold. That would take a significant dump. Pretty healthy hourly. I mean, this is a bull flag setup right now, but obviously earnings is gonna dictate whether or not we get any follow through or whether we pull back significantly. So T-God had a weaker bounce comparative to its peers over the past couple of days, and I take that back. I was thinking of a different chart. So let's start over. T-God keeping the daily uptrend, but giving us the tightening range, just like ACB, just like OGI. We've got our high, low, and now our lower high looks to be set at 462, and now we're going to be looking for the bulls to form a higher low compared to 402. So again, this is setting up to a scenario where if you want to be an aggressive bull, you're going to be making entries sometime in the next 2 days, utilizing the support level from the lows that we've been marking out. You'll get stopped off as CGC and the sector breaks bearish, and you will probably make a good entry and look for continuation if everybody breaks bull. N is the weakest Canadian MJ name out of the probably major 20-30 names that we look at. It's a bear flag on the daily time frame, but it's a tightening pattern. And again, I pointed out it's this same pattern, just shrunk, just condensed. So we got the low and the high on the same 4-hour candlestick. We have our higher low and lower high already set. And here we are coming down to try and form a higher low compared to 68 cents. Watch for this 4-hour equilibrium to continue to tighten into the end of the week. 68 is the most important support. 80 cents is the most important resistance. CXXI. So yesterday I said we would be watching for the potential of an entry because of the significant size of the pullback. The red flags of the volume are there. The hourly RSI level was extended, and the bull bounce didn't really get going into the end of the day. So the bulls do have momentum in their favor, but again, don't lose sight that with the size of this pullback, we will be looking for a lower high to form. And it's a bit of a different setup compared to everybody else because everybody else is already tightening up, whereas here we're going to be looking for CXXI to follow through and make a lower high. And this is where knowing what the sector is doing and using comparisons to other tickers and using correlations is so key. Because I could say, well, this timing isn't really great for CXXI because it looks like most of the sector saw profit taking at the end of the day, and we can anticipate most of the sector is probably going to see a little bit more profit taking tomorrow as well, and that's not going to be the best scenario for the bulls attempting to form a lower high. The bulls would love to form a lower high up around 190, and that would, be a solid bounce, but it's going to be really hard to see that 20% bounce almost, 18, 17% bounce if we are consolidating in the sector. So it's the sector setup that's leading us to believe that some short-term consolidation is coming. And because of that, CXXI might only see a little very short-term bounce and then fade back down towards its levels. So just be aware of what the rest of the sector is doing. If we do get significant follow-through and the bulls can pull it off, we'll have a nice equilibrium setup and tightening range here into next week as well. CWeb, one of the more strong bulls. So again, correlations, comparison to the peers in the sector. And we can clearly look at this chart when it pops up and say, this stands out significantly different than everybody that we just looked at for a number of reasons. Number one, it's not in a tightening pattern. We broke bullish with the daily higher low and higher high. We have changed the daily trend. Nobody else that we have looked at has changed the daily trend to bulls. The weekly higher low is clearly established now at 1751 after we held that level and saw follow through, and our sights are now set back on 2275, the recent high. And third, look at the volume. That bull volume is exactly what the bulls wanted to see and exactly what the bulls needed in order to break 20. So if we look at the volume for yesterday, 242,000, and we look at the first hour of volume today on CWeb, where are we? So that's here. And we look at the first hour of volume and it's 78,000. So 78,000 compared to 242,000 of yesterday's trading. So that's about 1 out of 3.5. That's over 30% of the volume, right around 30% in the first hour. So that tells us we're probably going to see some pretty high volume compared to the previous trading day. And what else stood out as unusual is the increasing bull volume after the open. If you look at stock charts, thousands of stock charts, the vast majority of them have the spike of volume in the morning when the bells ring and there's the most activity, singular, one bell. There's the most activity in the morning and then it fades. This pattern right here, you're going to see this, 80% of the time on any stock you look at that's traded on a major exchange and is liquid. It stands out significantly when you don't see that, when you see something different than that. And this is different. You have the open and you have increasing bullish volume the first 3 hours of the trading day. That's huge volume and that's follow through. So when you see increasing volume, whatever direction it's in, not only is this on the hourly time frame, this is on the 5-minute time frame as well. The very common pattern is every 5 minutes to start the morning, you see less and less volume. So if I see volume the first 10 minutes and then 15 minutes, the third candlestick on the 5-minute time frame into the day, we see a volume spike, whether it's a dump or a big bull push. That's very notable and it shows a lot of strength because again, it is not the norm of what we're used to. So these are volume clues that we can look at because we knew that we were either going to stay in a tightening range on CWeb or if we were going to break bullish, we had to see increasing bull volume and notable bull volume to cover that ground and break that resistance. And that's exactly what the bulls did. So recognizing that volume early on is important to getting good entries in trades. So now the daily chart has changed the trend. The next resistance is 2081 and 2135. Anything on the daily above 1775 will keep the daily uptrend intact. We closed with some solid bullish momentum. That's a fourth thing that's different. We didn't see the profit taken. We closed near the high of the day. We don't have a big upper wick. We didn't see it close near the low of the day. Different than everybody that we just looked at. CURA gave us some red flags on the bounce. It was very clear, and it is already trying to follow through with those red flags with the daily bear flag almost getting confirmed today. 817 was that support. We broke it by 2 pennies, but the bulls obviously defended that support. So now it's just the bulls attempting to fend off the bears here. New resistance is 889. That's a new daily lower high. We have a tightening range. We can consider the low a double bottom, but if we don't break 889, the bulls don't prove anything. So again, just looking at different names, we can clearly see that N is one of the weaker names. CURA on the US side of things is one of the weaker names, and that bounce meant or showed us everything. We didn't get anywhere near. I mean, if this is the size of the dump, the size of the bounce was what? 15% of that dump? So bear flag city. And the bulls attempting to hold support. Maybe they can, but not the kind of strong bounce that bulls want to be in. IIPR. So I sold IIPR a day too early. This is a scenario where we had news come out and they upped their dividend, which is obviously bullish news. You're going to get more money when they issue dividends if you're holding shares. So that's bullish news. I'm not going to get upset at myself at all or say, darn, I should have held, because there's no way we can ever anticipate news. I would have no way of knowing that we are going to have bullish dividend news today. And there's plenty of times where we see bearish news come out, like we're going to look at for NRTH. And it could have just as easily been bearish news. I would have been glad I sold. So again, sticking to the game plan, 74 was my target. We got close enough to my target, just under it, that I sold at the end of the day. That's good enough for me. Yes, if I held, I would have had more money. But looking back and review on the game plan, again, if I were to feel FOMO right now, it would be just silly. If I were getting down on myself for not holding and not anticipating that we'd have news. And that would be a psychological state that I would not want to be in as a trader. If I'm getting down on myself, I'm in this negative cycle, it's going to affect future decisions. And if you're able to just move past that, not care, on to the next trade, fresh, clean slate, it means all the difference in the world psychologically as a trader. Wrap it up with NRTH, and I said cautious. We're going to see a quick 10% pullback. Certainly didn't anticipate it would be in the next 1 minute of trading that we were going to see, but we had dilution news, and the stock price gapped down in response to that. So we are consolidating now on the daily. The last daily higher low is $1, so we're still way above that support level. We know another daily higher low is likely to form, but with the week close, it's not looking like that daily support level is formed yet. If we break 140, we're going to be looking down at the next support level of 126, and it's worth watching for a potential daily higher low to form. You better believe that after that kind of run, bulls are going to be looking to enter on a dip. Let's see how long it takes to digest that news, and let's see if in the next 2 days we have a bullish entry opportunity looking for the daily higher low to form. Look back at other charts historically. So how do I keep determining what's the most likely scenario? I'm looking at thousands of charts, tens of thousands of charts a year. And here on the daily time frame for OGI, we had a huge bull run, blue sky breakout. We pulled back, and it was dilution news that marked the top. Not sure if it was, I believe it was right there where they put out that dilution news. Either way, we pulled back. The bulls were there to buy that dip, and we saw a solid bounce from 812 to 920, over 10% bounce. So again, we can look at that and say, okay, that was a similar scenario. We had a blue sky breakout. The bulls were in full control, negative news, and the bulls bought that dip. We're going to be looking for the same thing to be happening here. And again, just might need one more day of pullback before we get that higher low. Watch the exponential supports, the 12-period exponential support on the daily time frame. We rode it on the way up. We've now extended above it, and that's going to be catching up as we're pulling back down towards it. That's where we stand for the sector. All eyes on CGC and the major names. Tightening ranges galore. Next week should get interesting. It could happen at the end of this week if there's a little bit to accelerate some kind of events. That's all I got. Let's go into story time. Do good things. Appreciate you watching. Hope you're having a good day. Stop. I think we're on story time chapter 7. And now we are leaving the place that I'm going to go back to house sit. But in the meantime, I got a couple weeks where I'm going to explore Colorado. First things first, heading through Rocky Mountain National Park. So just a bunch of exploring around every day, just an adventure to hike and camp and look at new things. And I was planning on going westward and then wrapping my way around through Telluride and then swinging back down to the south through Durango and Mesa Verde National Park. So this is up on Rocky Mountain National Park. And some of the roads, the elevation that they get up to and the mountains and the passes that they go through are pretty incredible. If you've never been in big mountains, if you've only been on the East Coast, here in North Carolina, 4,000 feet is a big mountain. And over there, you're looking at 13,000 plus feet. And you can be driving up over, 10,000, 11,000 feet. Very significant. So, nice wildflowers. When you're there in June and July, wildflowers can be popping off. And I was really taken aback and surprised by how many wildflowers there are in some of these fields. And of course, this cell phone picture doesn't do justice for the colors. But this was a nice lake. And again, all these lakes are pretty cool colors because a lot of them have runoff from these mountains and a bunch of minerals. And again, the water's freezing, but cool places to camp around. And in this particular instance, someone got lost up here. So I say how normally it's very quiet at about 5 p.m. But on this day, I don't know how you get lost. It wasn't like a kid got lost. A grown man got lost from around this lake. This is the destination where the trail leads up to. Anyway, so he was lost, and he got far enough away that, we're screaming at the top of our lungs, and we can only hear the tiny, faintest yell in the distance. So we know he's somewhere out there. We know it's getting dark, and he might have to sleep outside. So fortunately, that didn't happen. And he stumbled his way. From the last people that came up onto the trail, they said, yeah, some guy stumbled his way out and was asking if he was on the right trail and was heading back down. So that was nice. I think he climbed his way up to a better perspective to try and see where he was at. Don't get lost, because even the most well-marked trails and well-marked landmarks, you can still get lost, I guess. So next I went to, this is up near Aspen, Conundrum Hot Springs. This is definitely one of the highlights of the trip and my favorite hot springs out of, 15 plus that I've been in. My favorite by far. It's an 8-mile hike to get up to it on some pretty steep elevation. So it's a whole day's journey, and that keeps out, that's almost like a selective barrier that the people are going to make it up there are people that really want to be there, not the kind of people that just pull off the road and, hop onto a waterfall for 10 minutes. So hiked my way up, and this is a view from the top. The tents and the camping area is behind us up on the hill, and there's the view of the valley, and this is the hot springs. And we're back to getting naked in the stories because that's the only way to get into a hot spring. So it was just a lot of fun, and it was a completely different contrast in terms of the kind of people that were there, because I went up there on a weekday, and I was only planning on going for 2 nights, and I got up there and said, this is the coolest place. I need to stay here. So I started rationing my food and trying to stay as long as possible. And it was the kind of thing where I went up on the weekday, so I was there maybe Wednesday, Thursday, Friday, Saturday. I ended up stretching it to 4 nights. And the first few nights, it was very calm, very laid back. The people that were there were some really cool people, had some great conversations in there, talking about lucid dreaming. That's where I was talking about lucid dreaming with a young woman. And then she came back the next day and said that she had her first one after our conversation. And just very mellow and low key. And then there was a point in time where I was just sitting up there in this bigger pool by myself at maybe 4 o'clock, and I was naked, and one by one groups just started coming up, and they all started coming at the same time, and it's younger college kids, and they got the boombox, and they got a pool volleyball, a blow up ball, and we're passing around bottles of rum, and I got some moonshine that my buddy made, and everybody's trading things. And so it gets to the point where everybody's just hopping in, and everybody is wearing bathing suits, because you kind of get the feel, if there's a few naked people, everybody's more comfortable getting naked. If everybody's wearing their bathing suit, everybody stays wearing their bathing suit. So I was already in the water naked. Literally 20, 25 more people are in here with me, to the point where, everybody's sitting in a circle and there's not really a whole lot of space. I'm the only naked person in that hot spring. It was just a really funny scenario because no one knew it until I got out, and I'm just this naked dude who's been in there the whole time. So that was funny, but it was a fun contrast because, again, like I said, I wasn't really interacting with people much on this trip other than passing conversations, and it was really nice to be hanging out with people my age, and definitely a bit of a party up there on the weekend nights, and that was fun. Ended up eating glacier lilies to try and ration my food and make it last longer. So these are edible and pretty darn good, actually. So I was going around and eating a bunch of those, and I would ration my rice. And I made the mistake of bringing rice, but not bringing anything but brown rice. And when you eat brown rice every single day, it gets really, really boring. I didn't bring anything to spice it up. So there were some other hikers there who had some soy sauce, and they left soy sauce with me. And that was like a gift that completely changed everything, because brown rice day after day was getting very old. There was also an older guy up there, and he lives, you could call him homeless, but he chose to live in these national areas, and they have rules where you can only stay in certain areas 6 months of the year. So you'd have 2 camps, and he'd go 6 months to 6 months and just back and forth. And he would pretty much live up here at the hot spring, and he's been going for decades. And if anybody's been to this hot spring, there's a decent chance that you saw him. But he was just very knowledgeable on the area, and he had all these great stories. They were talking about how they brought a squash one time and put the squash under some rocks at the bottom of the hot spring, and a couple days later it was cooked, and they took it out and ate it. He also had some stories. Well, he had a lot of stories. That was a very interesting individual, someone that knowingly chooses to live on the land like that. And this man, the size of the pack, he was just this, frail little guy, but the size of the pack and the weight that he was carrying was putting me to shame. So it was extremely impressive how he was physically capable. And again, he's just been doing it for decades. So that's that. Go to Conundrum Hot Springs, Colorado, near Aspen. Definitely worth a hike up, although they could at this point. There were some issues where they were thinking about closing it and blah, 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 and the park services and all that. So double check and make sure it's still up. Hope you have a good day.